Equites has reported a strong performance from both its South African and UK portfolios. The group declared a distribution per share at the upper end of its guidance and expects this to grow further next year. Equites CEO Andrea Taverna-Turisan joins us now with greater detail on that performance. Thanks so much for your time today. Now, all the metrics in the green: property revenue up 71%, distributable earnings up 8.9%, and total distribution on the upper end of your previous target. Talk to me about some of the factors that have spurred growth.
I think ultimately the growth has been inspired in the UK by predominantly we've had a raft of rent reviews. So the UK market is very different to South Africa in that you get rent reviews only every 5 years.
Okay.
And we've had a concentration of rent reviews in the last couple of years, and the rent reviews have been particularly good. So sort of coming out of the COVID years and this massive inflationary pressure that we've seen come through, even in South Africa, I mean, obviously they've experienced it there too. And the consequence of which is we've had some rent increases. I think the worst rent increase we got was 28% and the best was 68%. So the effect of that obviously has helped, and coupled with that, you know, we've had moments of fortune as well, with the exchange rate sort of fluctuating sort of between the 22.50 and 25 rand a pound. So we've benefited from that too. And then in South Africa, the portfolio just seems to be going from strength to strength.
Yeah.
You know, we've sold down some of the smaller assets that were quite full in terms of the possibility that they had of really creating that outperformance over the next 10 years. We felt that there were assets that would retain tenancy, but would probably struggle to command the highest rentals. And so we felt that it would be a good opportunity through this reshuffle, for want of a better word, and then to redeploy that capital into these brand new, very long-dated ESG compliant assets. So, you know, the last 2 years has certainly not been, you know, the easiest in our 11-year journey. It's been a lot of really, really hard work, but I think probably the best work that the Equites team has undertaken since we listed. And it's often, you know, it's often the best work that's probably the one that gets the least praised and is the least noticed, but it becomes the foundation of the next launch pad, if you like. And I think that's what the last 2 years have been. And I think, I mean, I certainly am massively optimistic about, you know, what's coming our way in the next few years.
And talk to me further about that disposal program that you've undertaken. You've, you know, sold non-core assets to the tune of 1.4 billion in South Africa and R1 billion in the UK. Is that process completed, or are you still eyeing more of those assets?
So South Africa is more or less completed. There are a couple of assets that are deemed non-core. That, in fact, one transferred yesterday that was held for sale in the documentation that you would have seen. So let's say in South Africa, basically plus minus, we're done. I mean, I think we're very happy with what we've sold. We'll keep what we've got and we march on. In the UK, obviously, we're going through a process at the moment where we are looking at selling 5 assets that we are deemed, we define them as the Aviva portfolio.
Okay.
And that is going through a process as we speak, and it's been put out to a best bids process. We've got an expectation of what we should be achieving for it, and obviously in line with that expectation, should we achieve it, we would certainly be recommending to our investment committee and board to be accepting that. And in the case that we're not quite there, then we have no problem holding on to the assets for a further period of time. Balance sheet's nice and strong at the moment, but we just see that of those 5 assets, 4 of them have gone through rent review, and the other one's rent review is actually only due in 2027. So with that asset due in 2027, we have left a little bit of meat on the bone for the buyer, should we say. And then, to make matters super interesting, it's some hot news that came out yesterday is the tenant that's in that building is a company called Every, and it would seem that at the moment Every may be under offer to DHL, which means the buyer would be inheriting a DHL lease rather than an every lease, which obviously adds significant value to the property. So interesting how that will play out. And obviously it's all still subject to all the regulatory stuff and whatever. So, but yeah, so those are the dynamics of the world we live in logistics at the moment, is that there's consolidation. You know, there's been recently a big 3PL called DSV from Denmark taking out DB Schenker from Germany to become the biggest 3PL in the world. So these kind of consolidations happen, and you know, you could be doing a deal with a medium-sized enterprise, and 2 years into your lease, all of a sudden it's part of the biggest enterprise in the world, kind of thing, which obviously, you know, adds a lot of value as a landlord. Once the covenant goes to that institutional strength, it does benefit the owner.
So really interesting times ahead for Equites, Andrea. Now, we spoke about, you know, the tough trading conditions, what we've been seeing over the past 2 years. But I mean, Equites more shielded in tough times as you operate in the most favorable property sector in SA and in the UK, that being, you know, the industrial logistics space. Before rates came down, were there any other notable trends when you were operating in those tough conditions? This can be from a tenant retention perspective, and even when it comes to, you know, renewal negotiations.
Yeah. So tenant retention, we've probably retained over the last, let's say 2.5, 3 years. I think we must have renegotiated between 15 and 20 leases. Now that may not sound a lot to a landlord that's got a retail operation, you know, because they'll have that in a little neighborhood center kind of thing. But to an organization like us, that's a lot of leases.
Yes.
The scale and size of our buildings are obviously not small. What's positive is that every single lease that we've renewed, the level of reversion that we succumbed to, especially in the last year, you know, was only a -9%. Now you need to take that in the context of buildings that were built, you know, 10, 11 years ago, and have been subject to 8% escalations for 10 years. And you know, when the actual market was probably the real market escalation in that period was probably closer to 5. So I think, you know, it talks to the fact that the buildings are really high class, and it also talks to the fact that the buildings are in locations that are massively desirable, which has allowed those rental growth opportunities to have been significantly better there than maybe in some other locations. So that's been really encouraging. And then where we've lost tenants, that tenants have either outgrown the space or have decided to move on from one of our buildings, we've actually not had much vacancy. We've managed to fill the vacancy very quickly and achieve rentals. I mean, I think this year we had 2 buildings that went vacant, which we've refilled, and the average rental across those 2 buildings was 101 Rand a square. So, you know, it really talks to, again, the quality of the building, that it can be recycled back into the market and achieve that level of rental.
And yes, the quality of the building, and also just the growing demand we are seeing for these kind of facilities. And one of your objectives for the year was to unlock new facilities, particularly in SA. Talk to me about some of the developments you've completed before I let you go.
Obviously, we've completed I think 3 developments for Shoprite. One in Durban, one in Quebec, and one in Gauteng. You know, combined value is substantial. I mean, you know, and really, you know, we really are honored to be associated to Shoprite in all of this, because they really are market leaders when it comes to understanding supply chain, and they really put their money where their mouth is. Basically, they've invested in a supply chain which is the envy of the world. I mean, and I don't just mean in South Africa. I mean genuinely the world. And over and above that, though, what I would say is that what that does, though, is it puts pressure on their suppliers, because obviously now they've got these world-class facilities, but the world-class facilities need to be worked to make them viable and profitable. And they need goods and products to be coming through them, and suppliers can't be short delivering. So all of a sudden, there's a lot of pressure on the suppliers' supply chains in terms of them having to fulfill. And we foresee over the next 5 to 10 years that a lot of the processing, a lot of the manufacturing and FMCG companies are going to need to up the ante in terms of their supply chain, either by doing it directly themselves or outsourcing it to 3PLs. And ultimately, what that does is also then forces the competitors, to also start investing in their supply chain to compete. And so this is the exciting dynamic that we find ourselves in. And obviously, being a specialist and having the benefit of having worked across sectors, understood multiple different reasonings around supply chain and why one thing works and one thing doesn't, we do have the benefit of IP within our team that is actually, I think, the envy of the market, because we do have an understanding of not just a supermarket supply chain, but a clothing retailer supply chain, a third-party logistics supply chain, and so on and so forth. So, I'm really excited. I mean, the team has also really grown immensely in the last couple of years. We were tasked by our board, to really start thinking succession planning. Not that I'm going anywhere, but ultimately, every business needs to think about it. You never know. I could get run over tomorrow morning, God willing. God willing, not that way. Sorry. But as in that process, obviously, we've bestowed a lot more responsibility on people in the team, and it's incredible to see the high caliber individuals that we've got in the team and how they're performing in the team. So, from that point of view, as a leader, obviously, I'm really, really pleased.
Well done on those numbers, Andrea. Really a good performance out from Equites. Thank you so much for your time and taking us through the 12 months that was Equites CEO Andrea Taverna-Turisan.